So, as I was saying a while ago, now welcome back. Now, your coursework is based on this basically, right? Your coursework is based on Unit 4, Journals and Ledgers and Balancing Off. Unit 4 and Unit 3, but Unit 4, Journals and Ledgers and Balancing Off, it's basically based on that, right? So I have to go through this now. We can start it quickly. So what I can do it within 1 hour. So I can upload the coursework so you can start the work, all right? Now, to avoid too many entries being made to the ledger, and please note your coursework will not, let me say something. Your coursework will be a group work, all right? Groups of 5. Question, are there any groups in this class? And I'm gonna ask somebody to send me the groups, please. Group, if you have groups in the class already, send me your group names then please. Or if not, I'll create my own groups for the class. So, if you can send me the group names then please and thanks, I wouldn't mind. Okay?
Yes.
Send me them via what in a WhatsApp group or via email, whatever it may be. You want to see them?
So you have WhatsApp group?
Really?
I know, sir. I never know in the WhatsApp group, so I have to ask.
Christoph, really? So you tell again, boss?
Yeah, I'm in the WhatsApp group. I don't know so have a WhatsApp group. Up to what they may tell somebody if they can make a WhatsApp group.
No, they only have a WhatsApp group for HTM. For HTM.
For HTM, yes?
Then let me talk about, brother.
The accounts you talk about.
No, man, no. You need your accounts, brother. Keep it for HTM.
Yeah.
We know you know bad news now. No.
So, sir, the
Like
coursework can Excel.
Eh?
Yes, sir. The coursework can Excel we have to do it.
But of course.
Oh.
All right, let's go. Now, to avoid too many entries being made to the ledger, thus making it encumbered, the subsidiary books, also called the books of original entry or prime entry, are what? Used. In a trading entity, the subsidiary books are the general journal, otherwise called the journal, purchases journal, otherwise called purchases day book, purchase return journal, otherwise called what? Purchase returns day book or returns outwards journal, sales journal, otherwise called sales day book, sales returns journal, otherwise called sales returns day book or returns inwards journal, and the cash book and the petty cash book. All right? So we're going to look at source documents first. Now, information regarding the subsidiary books are usually obtained from source documents. Some documents are original sources of information that provide documentation, proof that a transaction has occurred, such as sales invoices, tickets, invoices from suppliers, contracts, checks written and checks received, promissory notes, and various other types of business documents. These documents provide us with the information needed to record our financial transactions in our bookkeeping records. Source documents detail the particulars of transactions that include the date, name, address, terms, and product description, among other relevant pieces of information. Types of source documents include cash sheets, canceled checks, and invoices. Source documents may be paper-based, business forms, or electronic documents. They are used for initial input of the accounting system. Transactions they record can be entered into the first of the accounting records, which is what? Journals. They assist internal control of the resources of the business, making sure that there is documentary evidence that a transaction took place, such as the purchase or sale of items and the receipt and payment of money. That is, it makes it more difficult for people to misappropriate or steal cash or other items. They are part of the audit trail for as long as those documents are required to be kept by law or policy. Of such, they are part of the record keeping process. Examples of source documents and the related business transactions are you have all right, so the examples of source documents include purchase invoice, which is received from the suppliers for goods or services purchased on credit, and they relate to what? The accounting book called purchases journal. Credit note, no, which these with the return of, which are created for the return of goods, allowances given, reduction of overcharge, and they all go and they will go into the purchase journal, the purchase returns journal, or the sales returns journal. Sales invoice now sent to customer for goods or services sold on credit. They go to what? Sales journal. They are posted to the sales journal, right? Or they are entered in the sales journal. That's the first entry in books of original entry. Debit note, no notification or increase in of undercharge of items. Go to the sales journal or the purchase journal. All right. Receipts are given to customers to indicate the amount of money they pay to the firm. And this is recorded in the what? Cash book. Petty cash voucher now to authorize petty cash expenditure. Recorded in the what? Petty cash book. Check to make payment from a bank account. Recorded in the what? Cash book. Invoice, credit purchase of unknown assets. Recorded in the journal. Inter-office memo, drawings, bad debts, depreciation. All of these recorded in the what? General journal. Right? The invoice is a document sent by the seller or the creditor to the buyer or the debtor in evidencing the sale of goods on credit. It is used by both seller and buyer to record the transaction in their respective subsidiary books. The seller will record the transaction in the sales journal, right? For the seller, therefore, it is a sales invoice. The buyer will make the entry into the purchase journal, thus making it a purchase invoice. All right. So you have a sales invoice and I have what? Purchase invoice. This document is sent to request payment for monies owed, sales invoice, of goods, so for goods that were delivered or services that were rendered. Right. Features of invoice include name, address of seller and purchaser, date of sale, description of sale, referring to goods or services, right? Quantity and unit price of what has been sold, details, discount if it is provided, total amount of invoice plus sales tax if applicable, and you have other date of payment or terms of sale. You have purchase invoice. This document is received in request payment for monies owed for goods that were delivered or services that were rendered. It is identical to the sales invoice, but is called a purchase invoice when the purchaser receives it. All right. An example of an invoice is shown below. This is a sample invoice. This document will be uploaded to iSIM so you can see it later on. This is a sample invoice right here. So you have the serial number of seller's invoice, name and address of seller. Then you have settlement, credit code offered for prompt payment, invoice date, then you have name and address of buyer, method of dispatch, you have details of customer order. These now are the what? Details of the goods ordered. So before deducting discounts. Then you have this one's given to traders. Net amount after deduction of discount. Then you have a sales tax or DCT. And then you have the amount to be paid by buyer. Then you have transportation costs paid by seller. You have authorized by and so forth. Expect so all right, this is what a simple sales, simple invoice. All right. Look at the credit note now. Credit note. So you have the seller, credit, and the customer. You have the different details now. Right. Credit note is usually completed in triplicate. The original is sent to the customer. One copy is placed in the business credit note file, and the third copy is placed on the customer's file being kept by the business. Right? The credit note is a document sent by the seller to the buyer to reduce the liability of the customer. It is usually sent for the following reasons. There's an overcharge on the invoice discount given after the invoice has been issued, allowance given for goods returned. So you see the 20% trade discount right here. See? Good. So that's what I was given, right? So discount given after invoice has been issued, allowance given for goods returned, or when some other event has occurred that has the effect of reducing the amount that they allow customer owes to the supply. Yeah. Debit note now. Same principle applies here, so. Debit note is a document sent by the seller to the buyer for the following reasons. There's an undercharge on the invoice. When charges such as insurance and transport are chargeable to the buyer. Yeah. Debit note can also be sent from a customer to a supplier to request a credit note in respect of an overpayment or return of goods. The seller will in turn send a credit note to the customer. Receipt note. This is a written document that confirms that money has been received as a down payment, account settlement, or installment. All right. Pay the cash voucher now. This document records in numeric order the specific amounts paid out in petty cash, to whom the payments are made, and for what purpose. Recording transactions from source documents now. Now, you have to remember these things, you know. Especially this table right here. Know where, what, go where, what, go where, what, go where, when, what go where. All right. So journals use the information from the source documents to create a chronological listing of all business transactions and detailed information about each transaction. Journals are preliminary records where business transactions are first entered into the accounting system. The journal is commonly referred to as the book of original entry. Specialized journals are journals used to initially record special types of transactions, such as sales and purchases in their own journal. Right? Why use special journals? Groups. So why use specialized journals now? Groups and records transactions of a like manner, right? A familiar example is recording all cash received by business in one place. It saves time with summary, so therefore you record purchases, credit purchases in purchase journal, credit sales in the what? Sales journal. Good. It saves time with summary and less frequent postings to the general ledger. Allows a business to have different individuals responsible for different journals, thereby increasing the internal controls and allocating the record keeping workload. Making entries now in the original books and ledgers. Now, let me get the books. Let me tell you folks, in 1 minute. Just 6 months. All right, so making entries in the original books and ledgers. Now, first thing, cash count. A cash count is given for prompt payment. There are two types of cash count, namely discount allowed and discount received. Discount allowed is a cash count given by the entity for customers for prompt payment. All right. Discount received is a cash count obtained by the entity, meaning obtained by you, the business owner, from suppliers for prompt payment. Discounts allowed and discount received are both reflected in the accounts. Discount allowed is an expense and discount received is an income. The term 5% in 15 days, net 30% means that a 5% discount, cash discount is allowed if the payment is made within 15 days, but the maximum credit period is 30 days. Share discount now. A trade discount is given by the entity to customers who buys goods in bulk and is given by suppliers to entity A trade discount is given by the entity to customers who buy goods in bulk and is given by suppliers to the entity for bulk purchases. Trade discount is deducted from the list price, all right, which is what? Gross selling price, and only the net price is reflected in the what? Accounts. That means that trade discount will not be shown in your journal any at all, nor anywhere else. Trade discount is deducted at the date of sale and does not depend on the date of payment. Therefore, if goods with a list price of 260,000 are purchased from Troll Alert Enterprise and a trade discount of 10,000 is obtained, then only $250,000 would be reflected in the accounts or in the journal, right? That is gross selling price minus what trade discount equal to 250. Now the trade discount of $10,000 would not be reflected in the accounts. Would not be reflected in the accounts, right? Trade discount. Trade discount depends on the quantity purchased, while cash discount depends on the what? Time of payment. All right, look at purchase now. Purchase refers to the cost of buying inventory for the purpose of resale as part of the business's daily activity. It does not include the purchase of non-current assets to be used in a business. This transaction is treated separately. A purchase may be made on cash or on credit. The accounting book in which the transaction is entered is determined by the type of transaction. Cash purchase is recorded in the cash book, whereas credit purchase is recorded where? In the purchases journal. All right? Now, for cash purchase now, when a cash purchase is made, following double entry is recorded. Debit purchase account and what? Credit, cash. Purchase is debited to the account for the increase in expense, whereas cash is credited for the account to the account for the decrease in what? Cash of the entity. Credit purchase now. In the case of a credit purchase, the fundable entry is recorded. Debit purchase, creditor. All purchases of goods or services on credit are recorded in the what? In the purchases journal or purchases day book on a monthly basis. All transactions with purchases journal will be recorded in the what? Purchases journal in date order. Since the invoices will be received from different suppliers, invoice numbers will vary. Therefore, in recording the invoices in the purchase journal, only date order is important. The gross purchase price of goods purchased from V Valley is $8,000. A quantity discount, trade discount is of $6,000 was received from V Valley. Therefore, only what? The net purchase price is figure of the 74,000 will be received in the what? Purchases journal. See there? 74,000. So only 74,000 will go where? In the purchase journal with V Valley as the name. Steps in journalizing credit purchase. Now, step one, make entry on purchase invoice. Step 2, enter credit purchases in the purchase journal throughout the period. Post the credit account throughout the months. They have step 3, the purchase ledger, where you have credit account and you put there and you purchase under the credit account. And step 4 now, you transfer the what? Total to the purchase account at the end of the what? Month. Total from the purchase journal to the purchase account at the end of the month. All right. The trade discount of $6,000 will not be reflected in the accounting book. So here's an example now of a purchase journal. So you have double Wally, follows PL, and you can, in your case, what you should do when you're doing your coursework, you should make up invoice numbers here, but it was always have what? PL in folder. Then you have your 10,000 from double Wally, R&D 24,000, S&D 50,000. All of these are what? Credit purchases. Good. All of these are credit purchases. All right. Then you have a total credit purchases for January 2017 transferred to purchase account. All right. 49,000. That is a sample purchases journal. All right. Please relog in at the end of the 9 minutes, as usual. Now you have purchase returns now. Purchase returns are or returns outwards are a normal part of business. Goods may be returned to supplier if they carry defects or if they are not according to the specifications of the buyer. A credit note is usually sent to the buyer as a proof that the goods are returned. Information on the credit note will be entered in the what? Purchase returns journal. So steps in journalizing credit purchases now. There should be anyway. So step 1, referring to the purchase returns, all right? There should be steps in purchases. There should be steps in journalizing purchase returns, yeah? All right. Step 1, make entry on credit notes. Step 2, enter credit returns in the purchase returns journal throughout the period. All right. Step 3, in the creator account, You would in the purchase ledger you would enter the one return outwards, and you return and you will enter the total. So the total of return outwards to the account at the end of the month to the what? Returns account in under the what? General ledger. All right. And folks, all of these you'll have to apply when you're doing your coursework. All right. Please note that. Then returns, we look at so returns outward our purchase returns journal. All purchase returns are recorded in the returns outwards journal. On a monthly basis, right? Purchases returns or returns outwards represent the value of goods returned to suppliers by the business. All right. The goods may be returned because of various circumstances, right? Because of various circumstances, right? All right. The goods may be returned because they are damaged or for some other reason. All transactions with return outwards journal will be recorded in the what? Return outwards journal in date order. All right. All right. Let's so see there now. So for this case now, the returns on goods to S Sandy, CMPL, credit note number, amount is $1,000. This is purchase. This is a return outwards journal. Sample total returns outward for January 2017 transfer to what? Returns outwards account. All right. Account treatment for purchase return now. In the case of credit purchases, the following double entry must be made upon purchase returns. Debit creditor and what? Credit returns, purchase returns. All right. For example, Target Limited purchased 20 cellular phones from Just Phones Limited at a cost of $5,000 each. Target later returned 3 of the phones as they were defective. The initial purchase will be recorded in the ledger as follows. So debit purchases account of 100,000. Then credit just phone account of 100,000. Upon the return of the following of the phones, the following double entry will be passed. Now, you must say $5,000 each. So 5,000 times 20 give out 100,000, right? But the return are 3 of them. 3 times 5 is 15,000. Good. Therefore, it would be debit Just Phones limited account 15,000 and credit what? Purchase returns account, 15,000. No further entry will be required as the account due to Just Funds Limited has been what? Reversed. All sales of goods or services on credit are recorded in the what? Sales journal or sales book on a monthly basis. All transactions with sales SJ will be recorded in the sales journal in the date order and invoice number order. The sales invoices should be used by the business in sequential order. The following column is a reference column and will be utilized when we are posting the transaction to the what? General ledger. Credit sales now. In the case of a credit sale, the following double entry is recorded. Debit, debtor, credit sales. For cash sale, when a cash sale is made, the following double entry is recorded. Debit cash, credit sales. Please re-log in so we can resume this session.